Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Sanctuary Wealth Chief Investment Strategist Marianne Bartels. Also with us is Michael Lee Strategy Founder Michael Lee. Great to see you both. Thank you so much for being here. And I want to kick things off with you, Michael, with markets this morning fractionally higher. Ahead of the Fed meeting, President Trump raised antitrust concerns over Netflix's planned $72 billion takeover of Warner Brothers, warning that the combined market share could be a problem. Watch this.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him, but it's a lot of market share. So we'll have to see what happens. And when they have Warner Brothers, that share goes up a lot. So I don't know. That's going to be for some economists to tell. And I'll be involved in that decision.
The deal is now facing scrutiny from the Department of Justice and from Congress as the Justice Department prepares for a lengthy review. Prediction markets now are pricing in a sharply lower chance that this acquisition closes by the end of 2026. Big news here, Michael. Your thoughts?
Yeah, look, it's looking like this deal will be a large breakup fee payout and not a deal completed unless several concessions are made. And Netflix, in this case, is a little bit of a victim of their own success in that there are lots of streaming services out there, but Netflix is far and ahead the leader in the pack here. But look, from the markets as a whole, this is a good sign to see these deals going. These are typically signs of strong markets when you see large acquisitions like this. And now that the government shutdown is over, the repo markets have somewhat healed. We're back to quantitative easing versus quantitative tightening, with the rate cut looking likely on the way very shortly. That stocks are back off to the races in that so much of equity markets are led by leverage, by the repo markets, and we saw a draining of liquidity during the largest government shutdown ever. So historically, government shutdowns have done very little to affect the markets, but this, however, was the longest shutdown ever. And I think we will see new highs in stocks by the end of the year, particularly a lot of recovery in some of the tech stocks that haven't quite gotten back to their October highs. So I'd be looking to buy up and down the AI spectrum and any of the names you like there, as the markets are just off to the races now.
Well, I mean, look, you heard what Jamie Dimon just said. I wrote it down. IPOs backlog is huge. M&A backlog is huge. I mean, that's what he just said to us. Marianne, markets are up this year despite all the volatility we've seen. The NASDAQ up better than 22% in 2025, outpacing the Dow's 13% gain, and the S&P is up 17%. But so much of this rally still powered by, as you just heard from Mike, big tech and AI spending. I've been asking the question repeatedly, when are we going to see a return on investment for all these trillions having gone into AI? And I spoke with Jamie Dimon about it as well, particularly with nearly 5,000 AI data centers already built. Watch this. Are we going to see any return on investment on all this money anytime soon? We've got about 5,000 data centers that have built for AI. Where's the return on investment?
I heard we did a research report about how much. It's $5 trillion, and that includes everything: the data centers, the servers, the chips, the fiber. It doesn't necessarily include the power plant or the transmission lines, but there will be big winners. You remember out of the internet, you got Google and Facebook and Amazon and tons of others and whole new technologies. But it took a while for some other things to come in, like the iPhone or something. So here, it will eventually pay off.
So, Marianne, what do you think? Dimon says the AI payoff is coming, but it'll take time. What are your thoughts on the timeline? And you're calling for a reset year in 2026. What does that mean?
So first on, this whole AI and investments, it's already having a payoff in earnings. Maria, the two sectors that are producing the two sectors that are producing the best earnings are in technology and communication services. So we are seeing earnings improve. Now, as we enter 2026, I am calling it for a reset year. We can't continue to have markets go up 20%. every year. So I'm expecting markets to correct intra-year. It's the midterm election year. We tend to have a lot of volatility during the midterms, particularly from April into September, but we do close the year up, but on a modest level, more around 6%. So I'm telling clients that, technology AI is still the leader. We may get a reset. It'll still be a good year, but we'll have a lot of volatility.
I mean, look, it's hard to match 20+% returns every year, right? You're absolutely right. Marianne, Bartels, great to see you. Michael Lee, always a pleasure to see you. Thank you both very much. We'll be right back.